let's venture into the world of GameStop. I think we should first talk about separating GameStop from the idea of what it now represents, which is sort of this movement against institutional short sellers. So let's first start with GameStop. What is GameStop for the viewers, and why all of a sudden has it become super important in the news?
Yeah, GameStop, bit of a nostalgic company for myself and other people of my vintage, if you will. But GameStop is basically a brick and mortar video game retailer. You used to see them in the mall. Now you see them primarily in strip malls. They have a pretty big physical footprint, and arguably a dying business model that was accelerated by COVID. The idea of a physical retailer with COVID doesn't mesh too well. And then you throw in the fact that they sell physical discs, where the majority of video game buying and playing now, video games are purchased online. And there are actually some video game platforms that don't even require a physical console. So the idea of selling those things, you can certainly put together a bear case.
Right.
And the stock was beaten up. Short sellers were all over it, and for some decent fundamental reasons, given the business model.
Yeah, absolutely. And there are bear and bull cases to GameStop, and we're not here to debate either of those. I think what we're trying to do is sort of shed light onto what's going on here. And I think the first place to start for the viewers is to explain what short selling is and why the short sellers were attacking a company like GameStop.
Short selling, if I want to short a stock, I basically want to make a bet that the stock price is going to go down. And so what I do is I borrow the shares from someone who is long the stock, so owns the stock outright. I borrow them, and hopefully the stock price goes down. As it goes down, I make money. And then I buy the shares back at a lower price than at which I borrowed them, and I profit on the trade. So short selling is a very important part of the market ecosystem. It brings more market efficiency. Many short sellers, they go out and investigate fraud. That doesn't seem to be the case here, but they serve a very important purpose within the overall market structure. They're sort of like the market's police, private investigators, if you will, and making sure that the market is efficient.
I mean, I think that was a very generous way to describe them. They're also they're also just like any other investor. They're out to make a profit, and they're out to convince you that their thesis is correct. And it's interesting to see the amount of short selling that was going on the GameStop stock was more than actually the shares were available for purchase in the open market, and they had shorted it down to somewhere around a couple dollars worth of per share price. So it pretty much bled itself out, and there was still a large short interest in the stock. And I think that's where there was some demand in the Reddit community, which we can describe that in a minute, to sort of take a look at this and say, you know what, I think these Wall Street guys might have this wrong, because they were over shorted on the stock and the stock was very low. So it was kind of a ripe opportunity. You have to give the Reddit users credit to say the big hedge fund guys were off, and they were ready to be taken advantage of in some respect.
For sure. I mean, any market participant that is over levered in one direction and doesn't manage their risk well runs the risk of someone getting on the other side of their trade and really blowing up their whole trade. And in many ways, that's exactly what happened. You don't get price action like this with the huge short squeeze that we saw unless there were some institutional investors that had way too big of a short position using too much leverage.
Yeah, and it's kind of funny to hear the institutional managers cry foul a bit on the whole process, just because they got taken advantage of when they weren't paying attention, because the reverse happens probably more times than not. So I guess it's also funny to hear them sort of categorize these Reddit disciples as the sheep in the market.
Mhm.
So, talk a bit about first the Reddit community, and there's some interesting and provocative research out there in some of those chat groups.
Yeah, I mean, crowdsourced investment research can be of very high quality, and there are a number of investors in the Reddit community that did some outstanding due diligence and very sophisticated modeling of GameStop for the long thesis. Talking about very sophisticated models and how they would predict sales of consoles, of gaming consoles, and how they could reduce their physical footprint. I mean, you could argue that there was better research coming out of the Reddit community than there was coming out of some of these institutions who, it if you said you were going to short GameStop, there really doesn't need to be much research done. That's not a difficult thing to
Right.
pass.
Yeah.
You just say brick and mortar retailer that sells physical video games. Okay, good.
Yeah.
Your trade's approved.
Yes.
But
See Blockbuster, right? Yeah. Like there's a
exactly.
lot
But
of examples of that.
yeah, but the research on the long side, a lot of it was very interesting.
Hmm. Yeah, and compelling. And like you said, I think a lot of things the Reddit community was researching and pulling up were things that these big institutional research shops weren't even paying attention to. So, kudos to those guys. Nice work on that. So let's talk about what sort of this whole thing morphed into as we've witnessed it play out. I think we would agree. While your case is bearish or bullish, the stock price has gone from somewhere around $20 to at sometimes well over $450, which fundamentally doesn't really make sense.
Yeah, anytime you get a big price jump like this, there's some nugget of positive fundamental information. I mean, we came into last fall, the stock was beaten down like crazy. You got positive vaccine news. The company came out and said they were basically going to survive COVID, survive the lockdown, and that's good fundamental news. And then you get Ryan Cohen becoming a member of the board, taking a huge investment, with his track record at Chewy.com, and the longs are feeling like, hey, this is a turnaround play, and I'm feeling pretty good about this.
Mm-hmm.
Then is where sort of the Reddit community, especially some high profile investors within the Reddit community that did some very provocative research, start posting trades where they made a tremendous amount of money. And it started to pick up. The stock goes from $4 to around $10, and then we come into January, and the stock's somewhere around $20, which arguably is overvalued based on the fundamentals. All these things that we just talked about. That's why a
Right.
stock goes from $4 to $10.
But at that price, reasonably, if you're a bull on that stock, you could be betting something reasonably in the between $10 and $20.
Yeah,
on a long-term outlook.
for sure. Yeah, you'd say, hey, my thesis is played out. This is a hold. This thing
Yep.
isn't necessarily overvalued, but there's still some positive things going on. But that is when obviously what happened is the stock over the course of a couple weeks at one point was trading over $500 a share. I mean, this thing went from a micro cap to a large cap in less than a month.
Mm-hmm.
And a lot of it was short covering. A lot of it was large institutional managers, short sellers that were far over levered with a huge short position, and the stock was moving against their thesis, and
Mm-hmm.
they had to close out their shorts. And when you're short and you have to close out your trade, that means you need to buy the stock. So that's the short squeeze.
Mm-hmm.
And then also the options volume is another part of this that's maybe less understood, but really the option dealers were driving up the stock price. I mean, there's also an element of market instability, market structure issues that went into this rally.
And so you could say that once the stock started to get some legs and it started to build some support in the Reddit community, and they saw this ginormous over-levered short position by these hedge funds, it was kind of like right for the picking. Like just pile on and take their money. Is that sort of the way
Yeah.
you could characterize it?
Yeah, for sure. I mean, you can go out and Robinhood and buy a call option way out of the money, and Plenty of folks on Wall Street Bets subreddit posted profits of over 1,000% in a couple days, and that just sort of fed on itself.
And so a couple of hedge funds had trouble, had to cover, actually got into some serious trouble, and probably had to get bailouts, as far as we know, or rescued from other hedge funds. What sort of this sort of has taken on a different meaning, and what has been portrayed as that this is a revolt against Wall Street. So, give our perspective on that.
Yeah, if you go out to places like StockTwits or like Wall Street Bets, and you read a lot of the posts, it does make you feel a little bit dirty sometimes. And there is a very strong anti-establishment movement. A lot of these traders, they're not really necessarily even incentivized by making money. They're more incentivized by seeing large institutions that shorted this stock and mismanaged their risks, seeing them go down in flames, and wanting to be part of bringing them down. So that element of it is a bit unique. Um, you know, you say, oh, well, this looks like market manipulation. Well, usually market manipulation like this, you have to prove intent to defraud people.
Right.
And that's not what happened here. A lot of these traders weren't even trying to make money. They were just trying to stick it to the man.
Yeah, I mean, I
Um,
think they're doing what the hedge funds have done in reverse, and I don't think there's any way you could argue against it. You did mention Robinhood, which has now become a big subject of discussion in this whole issue, and largely because they've had trouble sort of managing this process. So maybe can you give the viewers some perspective on what Robinhood's role is and where they're having their troubles?
Yeah, Robinhood made a big splash in the retail brokerage community by offering free trades and free option trades, and pretty rapid adoption of their platform by the retail investor community, especially on social networks. And they're a big reason why we've seen options trading volume surge past all-time records. And as this volatility started to pick up, um, Robinhood had to limit buying of the stock. At one point, they limited to you can only sell, only full liquidations of GameStop allowed. And that move, they came out later and said, we don't have liquidity issues, but that was to meet net capital and liquidity requirements. Oh, and we had to go get some liquidity from our investors. So there's an element of they weren't ready for this volatility, and you can argue they mismanaged their net capital and liquidity during this. So that is somewhat scary in terms of market structure. And then there's also the bigger issue of it looks like you're preventing the retail investor from making money. The stock's going up and you're saying no one can buy, you can only sell.
Yeah.
And that is a very political issue. So you saw political figures such as AOC come out and saying this needs to be investigated. And that's a lot of the political pushback right now is why are you limiting the small investor from making money on this stock?
And do we think this is a operational issue for Robinhood, or is this industry wide? Because we haven't seen this from other brokers, right?
It seems there were some other brokerages that had to limit buying, but it seems like this is more isolated to Robinhood, given their business model, given the types of investors that use their platform. And now we're seeing anecdotally that people are leaving Robinhood in mass and going to other more established brokerage firms.
Right. Yeah. It's interesting. Robinhood was sort of the idea behind the name, right? Take from the rich and give to the poor. Like, it's quite interesting. I guess it would be good. We're going to throw a graphic up here and maybe walk through the whole mechanics of a short squeeze and maybe just talk it through in simplistic form so people can understand it, because it is something that I think people need to understand, and it is a normal part of a functioning market. And when, just like any other case, when people get too over levered or too one sided, you become a target risk wise for these things to happen.
Yeah. Yeah, basically how it works, you start out with somebody owns a share of stock. In this example, we're using an Apple. So somebody owns an Apple. Somebody else comes in and say, "Hey, I'm going to borrow that Apple from you, and I'm going to sell it to somebody else for $5. When that happens, the stock doesn't necessarily move, but eventually you get down the road where you have so many people short the stock that if the price of the stock, i.e., an Apple, goes up at all, then people are over levered and they need to close out their shorts, meaning they need to buy more apples because they owe apples to someone else. And you get to the point where this feeds on itself. Now, the stock price is going up because everybody is closing out their short. Everybody has to buy apples because they owe someone else an apple. And that's how this feeds on itself. It's a self-reinforcing cycle. And that's why it seems like if regulation is to come out around this issue, it's most likely in the first place going to be against how did this big of a short position get built up in this stock, and institutions that were shorting this, how were you allowed to run this much leverage? Because this should never happen. A stock should never go from $4 to $500 in 2 weeks.
So, you would think not, for sure. But
right.
But I would actually argue that against regulation in this case, because what we've just witnessed happening is regulation. The market regulates itself. These Reddit guys and gals, they figured it out and they took advantage of the opportunity. And I guarantee you, hedge funds going forward are going to be smarter about making sure they're not over shorting a stock, because they're going to be ripe for a takeover like this. So it's going to be interesting to see how it plays out in terms of regulation. But I always hesitate to have the government step in, because usually when they do, the government wins.
The final chapter of this has yet to be written. And there is a lot of discussion of what does this mean for, say, an investment advisor like us who's investing in the long term and building diversified portfolios for clients. How does this impact our outlook? What's our take on this that is tangible, or is this just a fun sideshow? So that's something we've been having a lot of discussions about. These types of things, these weird quirks in the market, when things like this happen, it's usually near market tops. It's a sign that there's too much money in the system chasing too few assets. So that's one thing, and that's been a key to our outlook. You look at the stock price of GameStop and you look at the value of the business, and fundamentals have nothing to do with it, which is a tagline in our investment outlook. This is what happens when far more money is created than necessary. It's interesting that GameStop is such a known commodity in terms of their business. They didn't come out with an announcement that they're launching blockchain technology for their online sales. They're not getting into electric vehicles. They're not doing genetic sequencing. It's a brick and mortar retail whose stock price went up to $500 a share and went from a micro cap to a large cap in 2 weeks. Price in normal market environments, price means a lot.
Right.
It tells you something about the future prospects of a stock or a business. And that, in this instance, for sure, is totally gone. Right. Totally gone. I mean, if you look at the stock price at $500 and you were to say, what does that mean fundamentally? You would think that this stock is the next Amazon, that this company has made such positive momentum in their business and they're turning it around.
Yeah.
And that it is not that case. There is no confusion on that point. The business model hasn't really changed. And, that's what happens near market tops.
Right. And unfortunately, the way this probably ends won't be pretty for a lot of the investors who are in the stock, because of that, what you just said, there is really no upside to match that valuation. Then that stock price will come back down. And when it does, there'll be a lot of people who will be left holding the bag.